The Everything Machine, a comprehensive investor's guide to Amazon, AMZN. In the global market of January 2026, Amazon stands as far more than a store. It has successfully transitioned from an e-commerce giant into a foundational layer of the global digital economy. As of January 17, 2026, Amazon is a multi-trillion-dollar powerhouse that serves as a utility for the internet, a pioneer in artificial intelligence, and a logistics titan that rivals national postal services. For a new investor, understanding Amazon requires looking past the brown boxes on your doorstep. You are investing in a flywheel, a series of interconnected businesses where the success of one segment fuels the growth of the next. This 1,500-word guide breaks down the new Amazon of 2026, its financial health, and the strategic shifts that are defining its future. 1. The three engines of the Amazon flywheel. Amazon's business is built on three primary pillars. While the retail store is the most visible, it is actually the least profitable. The real moneymakers are the services hidden behind the scenes. Amazon Web Services, AWS, the profit powerhouse. AWS is the world's leading cloud computing platform. It provides the servers, storage, and processing power that run everything from Netflix to government agencies. The 2026 AI boom. In 2025 and early 2026, AWS saw a massive reacceleration in growth, hitting over 20% year over year because of generative AI. Companies are no longer just storing data on AWS, they are using it to build and run their own AI models. Profit contribution. AWS typically accounts for less than 20% of Amazon's total revenue, but often generates over 60% of its total operating profit. Without AWS, Amazon would struggle to fund its other ambitious projects. 2. The advertising giant. Quietly, Amazon has become the third largest digital advertiser in the world, trailing only Google and Meta. High intent. Unlike a Facebook ad that finds you while you're scrolling, Amazon ads find you when you are ready to buy. This makes Amazon's ad space incredibly valuable. Margin expansion. Advertising is a high-margin business. In 2026, Amazon is integrating ads into Prime Video and its Rufus AI shopping assistant, creating new streams of pure profit. 3. The retail and third-party marketplace. This is the core Amazon.com experience. 1P versus 3P. Amazon sells its own products, one party, but also lets millions of independent sellers list on its site, third party. Fulfillment by Amazon, FBA. Amazon earns commissions and fees from these sellers to store and ship their items. This allows Amazon to profit from a sale without ever owning the inventory risk. 2. The 2026 context, the AI and robotics revolution. If 2021 was about surviving the pandemic, 2026 is about efficiency through technology. The Nova and Olympus models. In late 2025, Amazon launched its Nova family of AI models, which compete directly with OpenAI's GPT-4. By integrating these models into AWS and its own retail site, Amazon is making its ecosystem more agentic, meaning the AI can now perform tasks like managing household supplies or negotiating bulk business orders automatically. Logistics automation. As of early 2026, Amazon has deployed over 1 million robotic units across its fulfillment centers. Using autonomous robots like Proteus, Amazon has reduced its cost to serve, the cost to get a package to you, by more than 15% in the last 2 years. This is critical for turning the slim margin retail business into a consistent profit generator. 3. Financial health, by the numbers, January 2026. Amazon enters 2026 in its strongest financial position in years. After a period of belt-tightening and layoffs in 2023-2024, the company is now a leaner, more profitable machine. Key performance indicators as of January 17, 2026. Stock price, approximately $242. Market capitalization, approximately $2.5 trillion. Revenue growth, stabilized at a healthy 11% to 13% annually. Free cash flow, FCF. In 2025, Amazon generated over $60 billion in FCF, providing the dry powder needed to invest in massive projects like satellite internet and AI chips. AWS annual run rate surpassed $110 billion, a psychological and financial milestone that solidifies its cloud dominance. 4. Moonshots, the future revenue streams. Amazon is famous for investing in day-one projects that might take a decade to pay off. 2 major moonshots are reaching critical stages in 2026. Project Kuiper, satellite internet. Amazon is building a constellation of thousands of satellites to provide high-speed broadband to the world. Currently in its early commercial testing phase, Kuiper aims to compete with SpaceX's Starlink. If successful, this could open a multi-billion-dollar market in rural internet and enterprise connectivity. Custom AI silicon. To reduce its dependence on expensive NVIDIA chips, Amazon is building its own AI processors, Trainium and Inferentia. In 2026, the Trainium 3 chip, built on a 3-nanometer process, is being used by major partners like Anthropic to train massive AI models at a 40% lower cost than traditional hardware. 5. The risks. What every beginner should know. No investment is without danger. Amazon faces 3 primary headwinds in 2026. 1. The antitrust shadow. The biggest risk for Amazon is the government.
In October 2026, a major antitrust trial is scheduled to begin in the US, focusing on whether Amazon's marketplace practices unfairly disadvantage small sellers. A breakup of the company is unlikely, but heavy fines or forced changes to the business model could hurt the stock price. 2. The capital expenditure trap. Building data centers for AI and launching thousands of satellites is incredibly expensive. Amazon is expected to spend over $115 billion in capital expenditures in 2026. If the AI return on investment takes longer than expected, this massive spending could weigh on the company's earnings. 3. Intense cloud competition. While AWS is the leader, Microsoft Azure and Google Cloud are fighting tooth and nail for AI market share. If AWS loses its technological edge, or if companies move toward a multi-cloud strategy, AWS's high profit margins could be pressured. 6. Investment strategy. How to approach AMZN. If you are looking to start an investment in Amazon in early 2026, consider these 3 professional approaches. The core holding strategy. Because Amazon is so diverse, retail, cloud, ads, healthcare, streaming, many investors treat it as a substitute for the S&P 500. It offers more growth potential than a standard index fund, but with the safety of a $1 trillion balance sheet. Watch the earnings calendar. Amazon is set to report its full year 2025 results at the end of January 2026. Historically, the stock can be volatile during earnings week. Conservative investors often wait for the post-earnings reaction to see management's guidance for the rest of the year. Dollar cost averaging. Given the stock price is currently near $240, buying a small amount each month allows you to smooth out the volatility. This is especially useful in 2026 as the market reacts to shifting interest rates and election year politics. Conclusion. The multi-trillion-dollar utility. Amazon in 2026 is no longer a high-risk growth stock. It is a diversified technology utility. It has become essential infrastructure for the modern world. Whether you are ordering a toothbrush, watching a movie, or building an AI app, you are likely using Amazon's pipes. For the investor, the bull case for 2026 is simple. AWS is re-accelerating, advertising is scaling, and robotics are making retail profitable. As long as the company can navigate the regulatory hurdles of late 2026, it remains one of the most compelling long-term wealth generators in history.